So yeah, welcome to another day at FOCAS 30. In this video, we are going to cover a few case scenarios from the case scenario booklet shared by your institute on the BOS knowledge portal for paper number 6A financial management. So similar, if you've seen the costing case scenario revision videos, you would have seen what the pattern is going to be. In video number 1 of costing, we solved around 5 case scenarios, the first 5 case scenarios. Similarly, in FM also, what we're going to do, you have roughly around similar 35 case scenarios across different chapters in your case scenario booklet. So we are going to solve a few sums in each of our videos and try to cover all the 35 in say 4 to 5 videos over the next couple of weeks. Yes, so the day before your exams, you'll have all the case scenarios covered roughly in what about 3.5 hours maybe for both 3.5 hours for costing, 3.5 hours for FM. So if you spend a good amount of 3.5 hours with these videos, say for example in 1.5x or 2x speed, which should be manageable, I think you'll be having a complete grip of all the chapters, different methods, different combinations of sums that can be asked as case scenarios for you to solve on the examination day. So this is what we are going to do with costing and FM. So now let us start with the first case scenario. NV Industries Limited is a manufacturing industry which manages its accounts receivables internally by its sales and credit departments. It supplies small articles to different industries. The total sales figure of the company stands at rupees 200 lakhs, out of which 80% is credit. So 200 lakhs is my total sales. Credit is 160 lakhs, which is basically 80%. Cash is remaining 40 lakhs. The company has a credit policy of 2/40 net 120. Past experience of the company has been that on average, out of the total, 50% of the customers avail the discount and the balance of the receivables are collected on the average of 120 days. So what does 2/40 net 120 mean? If you pay within 40 days, you'll get a 2% discount. If you pay beyond 40 days, there is no discount. The finance controller estimated the bad debt losses to be 1% of credit sales. So bad debts is how much? 1% of 160 lakhs, which is 1.6 lakhs. With escalating costs associated with the in-house management of the debtors, coupled with the need to unburden the management with the tasks, the CFO is examining the possibility of outsourcing its factoring service for managing its receivable. Currently, the firm spends 2,40,000 per annum to administer its credit sales. These are avoidable as a factoring firm is prepared to buy the firm's receivables. The main elements of the proposal are: it will charge 2% commission, it will pay advance against the receivables to the firm at an interest rate of 18% after withholding 10% reserve. Also, the company has option to take long-term loan at 15% interest or may take bank finance for working capital at 14% interest. You were also present at the meeting. Being a financial consultant, the CFO has asked you to be ready with the following questions. Consider the year as 360 days. What is the average level of receivables of the company? How much advance factor will play against receivables? What is the annual factoring cost? What is the net cost for the company if it takes factoring service? What is the effective cost of factoring on advance received? So this is the question they have asked you. Now let us solve the numbers. இது எல்லாமே நம்ம ஆல்ரெடி சால்வ் பண்ணிட்டோம். டோட்டல் சேல்ஸ், கிரெடிட் சேல்ஸ். ஸோ இதில் என்ன சொல்லியிருக்காங்க, 50% they'll receive within 40 days, remaining 50% they'll receive beyond 40 days, which is by 120 days. So 80 and 80. So average collection period எவ்வளோ? 40 days into 0.5 because 50% 40 daysல பே பண்ணிடுவாங்க. 50% 120 daysல பே பண்ணிடுவாங்க. So my average collection period ACP is 80 days. So average level of receivables எவ்வளோ இருக்கும்? Total receivables is 160 lakhs into average collection period is 80 days. Total days in the year is 360. This will come out to 35.56 lakhs, which is your answer, option number B. As simple as that. Yes, super. Second question, annual cost of factoring. So இப்போ factoring commission எவ்வளோ? Receivables 2%, which will be 71,111. ஃபேக்டரிங் ரிசர்வ் எவ்வளோ 10% அவன் வித்ஹோல்ட் பண்ணிடுவான், which is 3,55,556. ஸோ எனக்கு அட்வான்ஸா எனக்கு எவ்வளோ அமௌண்ட் அவைலபிளா இருக்கு? 35 lakhs இஸ் மை டோட்டல் ரிசீவபிள்ஸ். அதில் 3 lakhs ரிசர்வ் போயிடும், 71,000 கமிஷன் போயிடும். எனக்கு நெட்டா எவ்வளோ தான் அவைலபிளா இருக்கு? 31,28,000. இதுல ஃபேக்டர் என்ன பண்ணிடுவான்? he will deduct his interest also. இன்ட்ரெஸ்ட் எப்படி கம்ப்யூட் பண்ணணும்? அமௌண்ட் அவைலபிள் 31,28,889. he is going to finance us for 80 days, which is my average collection period. His interest rate is 18%. So this will come up to 1,25,156 rupees. So how much advance I will receive from the factor? என்னோட டோட்டல் ரிசீவபிள்ஸ் 35 லட்சம். ஆனா எனக்கு ஃபேக்டர் எவ்வளவுதான் முதல் நாள் அன்னைக்கு கொடுப்பான்? 30,03,733 ரூபாய் தான் கொடுப்பான். So that is your answer, which is option number C is your answer. 3. Annual cost of factoring. என்னெல்லாம் இருக்கு? Commission charges is there. This we have calculated for 80 days. Annual தான் நான் என்ன பண்ணணும்? 71,111 into 360 by 80. That will give you 3,20,000. Similarly, interest charge 125,156 for 80 days. 125,156 into 360 by 80 gives you 5,63,200. So my total cost is 8,83,200, which is option number A. Net cost to the company because of factoring. So factoring எடுக்கிறதுனால கம்பெனிக்கு என்ன காஸ்ட்லாம் சேவ் ஆகுது? One is bad debts, which is 1,60,000 already compute பண்ணிட்டோம். Cost of credit administration எவ்வளோ? 2,40,000. So my savings is 4 lakhs. 8,83,200 is my total cost. 4 lakhs is my savings. Net cost எவ்வளோ? 4,83,200 rupees. What is the effective cost of factoring? 4,83,200 is the cost. எவ்வளோ எனக்கு பைசா கிடைக்கும்? 30,03,733 into 100. This will give me 16.09% as my effective cost. With this, your first scenario is over. Now let us move to case scenario 2. Tiago Limited is an all-equity company engaged in manufacturing of batteries for electric vehicles. There has been a surge in demand for their products due to rising oil prices. The company was established 5 years ago with an initial capital of 10 lakhs. And since then, it has raised funds by IPO, taking the total paid up capital to rupees 1 crore, comprising of fully paid up equity shares with a face value of 10 each. The company currently has undistributed reserves of 60 lakh rupees. The company has been following constant dividend payout policy of 40% of the earnings. Retained earnings by company are going to provide a return on equity of 20%. The current EPS is 20 and PE ratio is 15. The company wants to expand its capital base by raising additional funds by way of debt and preference and equity mix. The company requires an additional fund of 1 crore 20 lakhs. The target ratio of owned to borrowed funds is 4:1 post the fundraising activity. Capital gearing is going to be fixed at 0.4. The existing debt markets are under pressure due to an ongoing RBI action on NPAs of the commercial bank. Due to challenges in raising the debt funds, the company will have to offer 100 rupees face value debentures at attractive yield of 9.5%, which is basically discount at a coupon rate of 8% to the investors. Issue expenses will be 4%. Preference shares will have a face value of 1,000, each offering a dividend of 10%. It will be issued at a premium of 5% and redeemed at a premium of 10% after 10 years. The CFO of the company is evaluating a new battery technology to invest the above raised money. The technology is expected to have a life of 7 years and will generate a after-tax marginal operating cash flow of 25 lakhs. Marginal is incremental cash flow. Assuming marginal tax rate to be 27%, answer the following. Which of the following is the best estimate of cost of equity? So cost of equity enna, issue price of debentures enna, what is the best cost of debentures to be issued by the company using approximation method, cost of preference shares using approximation method, which of the following best represents the overall marginal cost of capital to be raised? Yes, super. So first cost of equity கேட்டிருக்காங்க. My retention ratio, which is called as B, is 0.6. Return on equity is 20%. Dividend is எவ்வளோ? 20 rupees into 0.4. So 8 rupees is my dividend. Market price எவ்வளோ? EPS into PE ratio. EPS is 20, PE ratio is 15. So market price is 300. G is equal to B into R. So 0.6 is my B. R is 20 percentage. So growth is 12 percentage. D1 எவ்வளோ? D0 into 1 plus G. D0 எவ்வளோ? 40 percentage of 28 rupees, which we have calculated into 1.12. So this will be 8.96. So my cost of equity will be D1 by P0 plus G. This will give me 14.99 percentage. That is my cost of equity. Most accurate issue price of debentures. So now yield எவ்வளோ இருக்கணும்னு சொல்லியிருக்காங்க? 9.5% yield இருக்கணும்னு சொல்லியிருக்காங்க. கரெக்டா? So price of debentures is equal to present value of future cash flows discounted at yield. So this will be எவ்வளோ years useful life இருக்க போறது? Just a minute. So given anywhere. So the period of issue is not given. So let us assume it to be 10 years. So 10 years, the preference shares 10 years னு கொடுத்திருக்காங்க. So அதே 10 years equity shares க்கு இருக்கும்னு let us assume. So my interest that I am going to get is 8% of 100 rupees. So this will be 8 rupees. கரெக்டா? இந்த 8 rupees எவ்வளோ வருஷத்துக்கு எனக்கு கிடைக்கும்? 10 வருஷத்துக்கு எனக்கு கிடைக்கும். 10வது வருஷ கடைசியில எனக்கு எவ்வளவு ரூபாய் கிடைக்கும்? 100 rupees கிடைக்கும், which is going to be my redemption value. கரெக்டா? So now 8 rupees into, this will be for 10 years. So present value annuity factor at 9.5% for 10 years. 1 divided by 1.095 is equal to M plus is equal to M plus is equal to M plus is equal to M plus. 5 years M plus, 6 years M plus, 7 years M plus, 8 years M plus, 9 years M plus, 10 years M plus. So my total is 6.27879. So 2788. 8 into 6.2788 will be the present value of dividends, present value of interest plus present value of redemption will give me my value of debenture. So 50.234. 100 into 0.04. This is the present value factor at the 10th year. 40.35. So my total is 90.58. Answer C. Approximation method. What is the best cost of debentures? Approximation method na idhaan. So KD is equal to interest எவ்வளோ? 8 rupees. 1 minus 0.27 plus redemption value is going to be 100. Net proceeds எவ்வளோ இருக்கும்? Net proceeds will only be 96%. ஏன் சார்? 4% வந்து issue cost இருக்கு. So 90.58 into 96% gives you 86.96. So here, as I was writing, interest into 8 into 1 minus 0.27 plus 100 minus 86.96, the whole divided by 10 years, the whole divided by 100 plus 86.96 divided by 2. This gives me an answer of 7.64%, which is your option A. Yes. Next, the same method la preference share கேட்டிருக்காங்க. Let us calculate. Cost of preference capital is equal to preference dividend plus redemption value minus net proceeds divided by n, the whole divided by redemption value plus net proceeds divided by 2. So preference dividend is 10%, which will be 100. plus it is redeemable at 10% premium, issued at 5% premium, 10 years useful life. The whole divided by 1100 plus 1050 by 2, which will give me 9.77%, which is your option B. Last marginal cost of capital கேட்டிருக்காங்க. Existing equity capital already என்ன சொல்லியிருக்கோம் 1.6 crores. இப்போ எக்ஸ்ட்ராவா ஒரு 40 lakhs raise பண்றோம். So that is my extra. Preference shares 24 lakhs புதுசு. Debt 56 lakhs புதுசு. Yes. Now my capital gearing is how much? 0.4%, which is what they wanted. So அதை நம்ம இதை எப்படி இந்த 2 crores எப்படி அரைவ் பண்ணுங்கிறதுக்கு தான் இதை நான் சொல்றேன். ஸோ 1.6 crores கேபிட்டல் கியரிங் 0.4 இருக்கணும் அப்படின்னா டோட்டல் ஃபண்ட்ஸ் எவ்வளோவா ஈக்விட்டி எவ்வளோவா இருந்திருக்கணும் 2 crores இருந்திருக்கணும். 2 crores இருந்தாதான் எனக்கு 0.4 கேபிட்டல் கியரிங் வரும். ஸோ நவ் மை வெயிட்டட் ஆவரேஜ் காஸ்ட் ஆஃப் மார்ஜினல் கேபிட்டல் விச் இஸ் 40 lakhs, 24 lakhs and 56 lakhs will be 10.52%, which is your option A. ஸோ இன்க்ரிமெண்டலாக நான் எவ்வளோ அமௌண்ட் போட்டிருக்கேனோ அதுக்கு மட்டும் கேல்குலேட் பண்ணுவோம். That case scenario 2 is over. Let us start case scenario 3. Kaivalya Bodhi Limited has completed 35 years of operations in India. It has many subsidiary and associate companies in more than 100 countries. Its business include home and personal care, food and beverages, and industrial and agricultural products. It is one of the largest producers of soaps and detergents in India. It has grown organically as well as through acquisitions. Over the years, it has built a diverse portfolio and of powerful brands being household names. It is planning to acquire one of its competitors, Prestige, which would enhance the growth of KBL. The consideration amount will be 1.5x of its average market cap. Prestige Limited has 1,30,000 outstanding shares, valued at rupees 45 on the valuation date. Consideration amount will be paid equally in 5 years, where the first installment is to be paid immediately. Prestige has a overall cost of capital of 15%. KBL will raise funds through debt and equity in the ratio of 30 and 70. The company requires the cost of capital estimates for evaluating its acquisition, investment, and performance of its businesses. KBL's share price has grown from 150 to 301 in the last 5 years, and it will continue to grow in the same rate. KBL pays dividend regularly. The company has recently paid a dividend of 8 rupees. For the calculation of equity, an average 52 weeks market price in the last 5 years is to be considered, which is as follows. Year 1 MPS is 185, 210, 252, 325 and 280 rupees. K is calculated as per growth model and holds a weight of 0.6. The company also wishes to calculate its equity expectation using CAPM model, which holds a weight of 0.4. The risk-free rate is assumed to be 8%. KBL regards market risk premium to be 11%. Its estimation of beta is 0.78. It will issue debentures with the face value of 10,500 and which will be amortized equally over the life of 7 years. The company considers effective rate of interest applicable to an AAA rated company with a markup of 200 basis points as its coupon rate. It thinks considering the trend over the years, AAA rate is 7.5%. Ignore taxation. Based on the above details, calculate the cost of equity under both methods. Overall cost of equity, cost of debt if the intrinsic value of debt today is close to rupees 9,740. WACC and the amount of purchase consideration. Present value of purchase consideration is rupees how much. So first in the model, Gordon model, D1 by P0 plus G. Simple. So how much is growth? It was 150 before 5 years into 1 plus G to the power 5 is 301. 1 plus G to the power 5 is 2.01. இதை வந்து நான் annuity table பார்த்தேன் அப்படின்னா எவ்வளோ வருஷம் கழிச்சு 2.1 வருது அப்படின்னு பார்த்தேன்னா ஐ எம் கெட்டிங் தட் growth is 15%. annuity table உங்களுக்கு எக்ஸாம்ல கொடுப்பாங்க, ஸோ கவலைப்பட வேண்டாம். ஸோ D1 எவ்வளோ இருக்கும்? கரண்ட் இயர் மை டிவிடெண்ட் இஸ் 8% plus 15%, which will give me 9.2 rupees. ஸோ 9.2 divided by P0 என்னவா எடுத்துக்கணும்? average of last 5 years price, which is 252.4. So 9.2 by 252.4 plus 15, 18.65 is my cost of equity. If I use CAPM model, risk-free rate is 8. Market risk premium, which is basically RM minus RF, direct கொடுத்துட்டாங்க 11%. Beta is 0.78. So 16.58 is my cost of equity. Yes, understood? Super. So now what have they told you? they have asked you to calculate the overall cost of equity for the company. Correct? Overall cost of equity எப்படி calculate பண்ணணும்? So they have given you that KE is calculated as per growth model, holds a weight of 0.6. It also wishes to calculate equity expectation using CAPM model and holds a weight of 0.4. So my overall cost of equity will be KE overall is equal to Gordon model நான் எவ்வளவு calculate பண்ணேன் 18.65 into 0.6. அதுக்கு தான் அந்த 0.6 னு கொடுத்திருக்காங்க 18.65 into 0.6 plus 0.4 into எவ்வளவு calculate பண்ணிருக்கேன் 16.58. இது ஆட் பண்ணா எனக்கு என்ன ஆன்சர் வருது 17.82, which is option number A. Third option, they have given you what is the cost of debt. Cost of debt if intrinsic value is 9,740. So அவங்க என்ன சொல்லிட்டாங்க, over the period of 7 years I'll be repaying debt on a regular basis அப்படின்னு கொடுத்துட்டாங்க. கரெக்டா? Yes or no? Super. What will be my interest rate? Interest rate will be AAA rated bond plus 2%. 200 basis points அப்படின்னா என்ன 2%. 200 basis points means 2%. So நான் டோட்டலா எவ்வளவு borrow பண்றேன்? ஒரே நிமிஷம். So now what you are supposed to calculate? You are supposed to calculate cost of debt. Correct? Cost of debt la what has happened? So my face value of debentures is 10,500. This has to be amortized equally over 7 years, which will give me 1,500 per year. So என்னோட first year எனக்கு எவ்வளவு அவுட்ஸ்டாண்டிங்கா இருந்திருக்கும் 10,500 இருந்திருக்கும். இதுக்கு நான் இன்ட்ரெஸ்ட் எவ்வளவு பே பண்ணிருப்பேன் 9.5% பே பண்ணிருப்பேன். 10,500 into 9.5% gives you 997.5. Yes, super. So now 1,500 plus 997.5 gives you 2,497.5. இத present value at 10% calculate பண்ணா 2270.45 வரும். Present value at 15% calculate பண்ணா 2171.74 வரும். இப்போ இது calculate பண்ணியாச்சா? இப்போ year 2 10,500ல ஒரு 1,500 நான் amortize பண்ணிட்டேன். So அது மைனஸ் ஆயிடும். So இப்போ என்கிட்ட எவ்வளவுதான் இருக்கும் 9,000 into 9.5 இருக்கும், which will be 855. 855 plus 1,500 at 10%, 1946 at 15%, 1780. இதே மாதிரி நான் 7 வருஷத்துக்கு போட்டுட்டே வரணும். போட்டுட்டே வந்தா நான் என்ன பண்ணுவேன்? So now I should calculate my cost of debt to be 10%, which is my base number, plus 10,340 minus 9,740, which is my intrinsic value. Intrinsic value எவ்வளோ 9,740. என்னோட வேல்யூ 10,340 இருந்துச்சு அப்படின்னா my discounting rate is 10%. என்னோட வேல்யூ 8,938 இருந்துச்சுன்னா என்னோட discounting factor is 15%. எவ்வளோ இருந்ததுன்னா என்னோட intrinsic value will become 9,740. அதுதான் நம்ம calculate பண்றோம். So 10,340 minus 9,740 divided by 10,340 minus 8,938 into 15 minus 10, 5. So this will give me an answer of approximately 12%. This is your approximation method. So 12% is your right answer. Calculate WACC and amount of purchase consideration. Yes. Purchase consideration is very simple. WACC very simple now. WACC எவ்வளோ? Debt is 30%. 30 is to 70 ratio கொடுத்துட்டாங்க. 30 into 12% debt. 0.7 into 17.82. So my overall cost of capital is 16.07%. So what your answer? 16.07 ஓட ஒரு நம்பர் தான் இருக்கு. ஸோ அதுதான் ஆன்சரா இருக்கணும். பட் இந்த 87,75,000 ஈஸியாக கால்குலேட் பண்ணிடலாம். எப்படி சார் கால்குலேட் பண்றது? அந்த அக்வயரிங் கம்பெனி கிட்ட பிரஸ்டீஜ் லிமிடெடோட நம்பர் ஆஃப் ஷேர்ஸ் எவ்வளோ? 1,30,000 shares. Each share is worth 45 rupees. They have told you that they are going to pay 1.5 times of its market capitalization. To calculate this, the answer that you get will be 87,70,000. Present value of purchase consideration. So 87,75,000 FD pay பண்ண போறாங்க equally over 5 years. 87,75 divided by 5 gives you each year it is 17,55,000. This should be discounted at cost of capital 16.07 la நான் discount பண்ணனும். Discount பண்ணா my present value comes up to 66,58,997, which is your option D. This case scenario number 3 is a very important case scenario, very complex case scenario. So please make sure you definitely solve this the day before your examination. Now let us move to case scenario 4. Matangi Limited is a news broadcasting channel having its broadcasting center in Chennai. There are a total of 200 employees in the organization, including top management. As a part of employee benefit expenses, the company serves tea to its employees, which is outsourced from a third party. The company offers tea 3 times a day to each of its employees. The third party charges 10 for each cup of tea. The company works for 200 days in a year. Looking at the substantial amount of expenditure, the finance department has proposed to the management for an installation of a master tea vending machine from Nirmal Limited, which will cost 5 lakhs with a useful life of 5 years. Upon purchasing the machine, the company will have to incur annual maintenance, which will require 25,000 every year. Machine would require electricity consumption of 500 units per month, and current incremental cost of electricity will be 24 per unit. Apart from these running costs, the company will have to incur 8 lakhs for consumables like milk, tea, powder, paper cup, etc. It is in 25% tax bracket. Straight line method is allowed for taxation. Nirmal Limited sells 100 master tea vending machines. Variable cost is 4,50,000 per machine and fixed operating cost is 25 lakhs. Capital structure of Matangi and Nirmal Limited is as follows. Risk-free rate of return is 5%, market return is 10, beta is 1.9. You are required to calculate the following 5. If sales of Nirmal Limited are up by 10%, impact on its EBIT. Combined leverage of Nirmal Limited. Discount rate that can be applied for Matangi, making this investment decisions of Matangi Limited. Incremental cash flow due to the investment in machine. Net present value of investing in the machine by Matangi Limited. These are the items I am supposed to calculate. Yes, now let us see. First, sales எவ்வளோ? Nirmal Limited sales எவ்வளோ பண்றாங்க? There are 200 employees. Correct? So Nirmal Limited will sell vending machines. Sorry. So Nirmal Limited sells 100 master vending machines. So one vending machine value is 5 lakh rupees, which is given here. So 100 into 5 lakhs, 5 crores is my sales. Variable cost direct 4,50,000. So 100 into 4,50,000, 4 crores 50 lakhs. Contribution is 50 lakhs. Fixed cost is 25 lakhs. EBIT is another 25 lakhs. They've also given you that there is 15% debentures of 40 lakhs. So 40 lakhs into 15% is 6 lakhs. So my EBT is 19 lakhs. Operating leverage எவ்வளோ? Contribution divided by EBIT. So 50 divided by 25 is 2 times. So this means for every 1 time increase in sales, my EBIT will increase by 2 times. Correct? So now if my sales increases by 10%, my EBIT will increase by 20%, which is basically 10 into 2. So 20% is your answer. Now second requirement, what is the combined leverage? So operating leverage 2 calculate பண்றோம். Financial leverage is EBIT by EBT. EBIT by EBT is 25 divided by 19, 1.315. So my combined leverage is 2 into 1.315, which will be 2.63. This is my combined leverage, which is your option B. Discount rate, it can be applied. Discount rate is basically cost of capital. So what will be my discount rate? Amount is 40 lakhs share capital. Cost evlo RF plus beta, which is 1.9 into market rate is 10 minus RF is 5. This is basically CAPM formula. RF plus beta into RM minus RF. This gives you 14.5%. Reserves and surplus அதே amount தான். Preference share capital 12%. Debentures 11.25% because there is a tax element. So the weighted average cost of capital will be either a different way of calculation. This is also correct. But நீங்க உங்களோட யூசுவல் லாஜிக்லயே போடலாம். 40 lakhs divided by 97 lakhs, 25 lakhs divided by 97 lakhs, 12 lakhs divided by 97 lakhs, 20 lakhs divided by 97 lakhs into the respective numbers will give you 13.52%. Yes, super. Now, what is the benefit of me investing in this machine? So 200 employee இருக்காங்க, 200 நாள் வேலை பார்க்குறாங்க, ஒரு நாளைக்கு 3 தடவை டீ குடிக்கிறாங்க, 10 ரூபாய். ஸோ என்னோட காஸ்ட் எவ்வளோ 12 லட்சம் ரூபாய் குறையும். பட் எனக்கு அதிகமாக என்ன காஸ்ட்லாம் ஆகுது? ஆனுவல் மெயின்டெனன்ஸ் ஒரு 25,000 ரூபாய் இன்க்ரீஸ் ஆகுது. காஸ்ட் ஆஃப் எலக்ட்ரிசிட்டி எவ்வளோ? ஒரு மாதத்துக்கு 500 யூனிட்டு 24 ரூபாய் ஒரு யூனிட்டுக்கு. ஸோ 12 மாதத்துக்கு 1,44,000. கன்சியூமபிள்ஸ் டைரக்டாக கொடுத்துட்டாங்க 8 lakhs. டெப்ரிசியேஷன் இஸ் 1 lakh. ஸோ எனக்கு மெஷின் வாங்கினா எக்ஸ்ட்ராவா எவ்வளோ ப்ராஃபிட் கிடைக்கும்? 1,31,000 கிடைக்கும். பிகாஸ் நான் கொடுத்துட்டு இருக்கிற டீ நான் வாங்குறதுக்கு 12 லட்சம் செலவு பண்றேன். பட் நான் மெஷின் வாங்கினா எனக்கு 169, 969, 10,69,000 தான் செலவாகும். மிஷினை வாங்கிட்டேன்னா என்னோட ஆனுவல் எக்ஸ்பென்சஸ் 10,69. வெளியில இருந்து வாங்கினேன்னா இட் இஸ் 12 lakhs. ஸோ மை சேவிங்ஸ் இஸ் 1,31. இந்த சேவிங்ஸ் என்ன ஆகும்? என்னோட ப்ராஃபிட்டை இன்க்ரீஸ் பண்ணும். அதுக்கு நான் 25% டாக்ஸ் கட்டணும், which is 32,750. ரைட்? ஸோ 32,750 மைனஸ் பண்ணா 98,250. இதுல டெப்ரிசியேஷன் 1 lakh ஆட் பண்ணிட்டா என்னோட கேஷ் ஃப்ளோ ஆஃப்டர் டாக்ஸ் எவ்வளோ? 1,98,250. இங்க 13.52. Net present value of investments. That is the only thing that is left. So initial investment is 5 lakhs. So into 1%, 5 lakhs. Savings, varsha 198,250 is going to be my savings. Present value annuity factor is 3.473. So that is 6,88,522. So my NPV is 1,88,522 per year. 5 lakhs is minus 688,522 is a positive number. In that case scenario 4 is over. 188,522 is your NPV. Right? Now let us go to illustration 5, which will be the last illustration for this particular video, or rather case scenario 5. Small bus company is into manufacturing mini buses. Since its establishment, it has seen a phenomenal growth in both its market share and profitability. The financial statements are shown below. The company enjoys the confidence of its shareholders, who have been rewarded with growing dividends year after year. Last year too, the company had announced 20% dividend, which was the highest in the automobile sector. The company has never defaulted its loan repayments and enjoyed a favorable phase with its lenders, which include financial institutions, other private debenture holders, blah, 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 blah. The competition in the bus industry has increased in the past few years. Foreign bus manufacturers வந்திருக்காங்க. Mini bus segment especially will witness entry of foreign majors in the near future, with latest technology being offered to the Indian customer. Small bus companies management realizes the need for large scale investment in upgradation of technology and improvement of manufacturing facilities to beat the competition. While on one hand the competition in the industry has been intensifying, on the other hand there has been a slowdown in the Indian economy, which has not only reduced the demand for buses but also led to the adoption of price cutting strategies by various bus manufacturers. So உங்க எக்ஸாமினேஷன் கொஸ்டின் பேப்பர் சைஸ், அதாவது எவ்வளோ பெரிய பேப்பர் வரப்போகுது, அந்த பேப்பர் சைஸ்ல considering the font size that the institute adopts, this particular garbage is there, no, except this 20% dividend. I'll not say garbage, but this particular it is actually garbage. There is nothing there in this 2 page of information. So total, there is nothing that is going to be incremental to you from this except this 20% dividend. This is how our beautiful institute misguides you, makes you spend the time in areas where you need not spend the time. நீங்க பார்க்கறச்சேயே is there any relevant information டக்கு டக்குன்னு scan பண்ணிட்டே வாங்க. If you feel that there is no relevant information, please skip it. Whenever you solve the sum, if at all there is a relevant information which you find it is missing, you can once again go back and read. But this is going to suck up a lot of time, so please be conscious. The institute gives you such a large text, there is always a very high probability that there is nothing inside except this 20%. Company needs 3 crore 12 lakh 50,000 for its investment in the technology. It has three options. It may issue entirely equity shares, 15 lakh 62,500 equity shares at 10.5 and 1 lakh 56,250 debentures at 100 denomination bearing a 9% rate of interest. 15 lakh 60,000 equity shares and 1 lakh 56,250 preference shares at 10% rate of dividend. The company's EBIT after investment is 37 lakh 50,000. Income tax rate applicable is 40%. You are required to answer the following questions. What is the EPS under Financial Plan 1, Financial Plan 2, Financial Plan 3? What is the EBIT EPS difference point between Plan 1 and Plan 2? EBIT EPS difference points between Plan 1 and Plan 3. Very simple. Current EBIT evallo 37 lakh 50,000. Option 1 is full equity, so there is no interest, there is no preference dividend also. So my EBT will also be 37 lakh 50. Tax is 40%. PAT is 22 lakh 50,000. Number of shares is 31 lakh 25,000. So my EPS is 0.7. 31 lakh 25,000 எங்க இருந்து சார் வந்தது? Questionலே கொடுத்துட்டாங்கப்பா. தயவு செஞ்சு எங்க இருந்ததுன்னு கேட்காது. So 0.72 is your answer. Next, financial plan 2 is debt and equity mix. 37 lakh 50,000 is my EBIT. How much will be my interest? I'll be giving 15 lakh 62,500 debentures at 9% interest. So 1 lakh 40,000, 14 lakh 6,250 is going to be my interest. EBIT is 23,43,750. Tax minus panna 14 lakh 6,250. They are giving you 15 lakh 62,500 shares divided by 0.9, divided by 14 lakh 6,250 divided by 15 lakh 62,500 shares gives you 0.9 EPS. Option 3, EBIT is 3750, interest illa, tax 40% போச்சுன்னா 22 lakh 50,000 இருக்கும். Preference dividend is 1562,500. PAT will be 687,500. Number of shares is 1562,500. So EPS is 0.44. Yes or no? EBIT EPS indifference point between plan 1 and plan 2. எப்படி calculate பண்ணலாம்? EBIT into 1 minus tax rate divided by number of shares under alternative 1 is equal to, indifference point equal இருக்கணும், EBIT minus interest. Just give me a minute. It should be equal to EBIT minus interest into 1 minus tax, the whole divided by n2. So EBIT எவ்வளோ எனக்கு தெரியாது. 37 lakh 50 அப்படின்னு எழுதினேன்னா மண்டேலே கூட்டிக்கோ. ஏன்னா எவ்வளோ இன்டிஃபரன்ஸ் பாயிண்ட் என்னன்னு அவனே கேட்டிருக்காங்க. ஸோ யூ கேனாட் ரைட் திஸ் 37 lakh 50,000. அதனால தான் நான் 3750 எழுத ஆரம்பிச்சேன். டாக்ஸ் ரேட் வில் ஆல்வேஸ் பி கான்ஸ்டன்ட், அது மாறப்போகிறது இல்லை. Number of shares will also be remaining constant. So 31 lakh 25,000. This is under alternative 1. Alternative 2, once again EBIT, I don't know. Interest is going to remain constant, 14 lakh 6,250 into 1 minus 0.4 divided by 15 lakh 62,500. If I solve for this equation, I get that my answer is 28 lakh 12,500 will be the EBIT. At an EBIT of 28 lakh 12,500, plan 1 or plan 2 will give me the same amount of profits, is what we are trying to say. Yes. Now second என்ன கேட்டிருக்காங்க, EBIT EPS indifference point between plan 1 and plan 3. Plan 1 அதே தான், EBIT into 1 minus 0.4 divided by 31 lakh 25,000 is equal to EBIT into 1 minus 0.4 minus 1562,500, which is your preference dividend, the whole divided by 1562,500. இதை சால்வ் பண்ணா எனக்கு ஆன்சர் என்ன கிடைக்குது, 52,08,333, which is your option D. So case scenario 5 is a very simple sum. If it is asked in the exam, you are given a literal bonus of 10 marks in your examination. 30 தூக்கிட்டு வந்துடணும். Okay. I hope and I pray God that you get such questions as case scenario so that you can easily get marks. But if that is going to be the case, it's something that only institute can deliberate on and give you as a question paper on the day of examination. But I do pray that you get such questions in your examination. With this, we have solved 5 case scenarios in this particular video. In the next video, let us solve a few more case scenarios. And as I told you, over the next 20 odd days, a couple of weeks, what we are going to try at FOCAS is solve all these 35 case scenarios from both costing and financial management to give you a complete grip on the day before exam. If you watch 3 hours for costing and 3 hours for FM, all case scenarios that are given by the institute are done at one go. Yes, thank you so much. Happy studying. Tata, bye bye.